Porter. Great to meet you. Thank you for doing this.
Man, it's really my pleasure to meet you, Michael. It's impressive what you've built with this podcast.
Thank you so much. I want to start off with a quote, a great quote by you, and I wrote it down to make sure I didn't screw it up. Sometimes wrong, but never in doubt.
Well, that's the key to anyone who's anyone in the newsletter business. I'm really proud of my long-term record as an investor, but as a newsletter publisher, if you're not willing to get out there and you know be the guy shouting, you're not going to sell any subscriptions. So you got to be out there, and you've got to be willing to push a view, and you've got to be willing to stand behind it if you're going to get anyone to come and look at what you're writing. Because if you just sound like everybody else, we have a very consistent history of good conservative investments. You're not going to get any subscribers. So yeah, I try to take on important views, and I try to be very exponentially firm about how I view them.
Have you always been that way?
I would just say that I lack any kind of natural filter. I don't. Like my mother likes to say, I've never understood the luxury of an unexpressed thought.
Does that come from her?
Definitely comes from the Irish side, yes.
Because so many people, they hesitate. And I'll admit, I'm one of those people that kind of waffles back and forth and cast doubt sometimes in my decisions. And so when I heard you say that, I was like, wow, that really, I need to apply that more to myself. And so I'm just wondering if that's a skill that you built, or was that something naturally inside of you?
I'll say this, my 14-year-old son has this too. I have a uniquely intuitive view of the world, and I don't actually know where it comes from. And that sounds like I'm bragging, but I'm really not. I've just always been able, for some reason, to make an intuitive leap when handed a set of facts that other people, for some other reason, are not able or willing to make. And the best way I can describe it for you is when I was doing my research into General Motors. This is back in 2005. And at the time, I had a business of recommending investment research for short selling candidates. Now, I haven't done that in a long time because, as you probably know, short selling is just a very hard game to win. You have to pay to borrow the capital. And, because of inflation, generally speaking, nominal prices rise. It's a very hard way to make a living. And I just moved away from it because there's just easier and better things to do with my time. But back then, and between 1999 and 2009, I did it quite a bit as a hedge. And my favorite situation was a very large business, because those businesses aren't very volatile, where the balance sheet meant that ultimately there was no way I could lose as a short. In other words, the balance sheet is so encumbered, even if the management team executes incredibly well, they're never going to escape the debt load. It's just gravity. It's eventually going to crash. And so when I looked at General Motors, I found that in 19 of the past 20 years, and this was in 2005, in 19 of the past 20 years, they hadn't made enough money selling cars to even pay the interest on their obligations. And I'm not talking about, making what were really desperately needed acquisitions, capital for acquisitions. I'm not talking about making desperately needed improvements in property and plant and big CapEx. I'm talking about they couldn't make enough money just selling cars to pay their interest. So there was no question, as soon as 2005, in my mind, the company was going to go bankrupt. It was already really bankrupt. It just wasn't insolvent yet. And yet there was no one else. If you go back and look at 2005, there was no one else in the world that was explaining why General Motors bankruptcy was absolutely inevitable. And of course, it didn't happen until the end of 2008, but it was sitting there. It was going to happen. And so for me, I've always been able to just accept the facts as I find them and not really put too much more behind it. I can't tell you why nobody else saw that. I can't tell you why nobody else. It was in black and white that Fannie Mae and Freddie Mac had $250 billion worth of subprime mortgages. They're not going to get out alive. And today, I've been warning very explicitly for probably a year now that with equity prices where they are, with a CAPE ratio in excess of 30, that I don't know what the pen is going to be. But, within 12 or 36 months, stock prices are going to get completely hammered. And To me, these things are very black and white. They're very fact based, and so I don't shy away from saying it exactly as I see it. And a lot of times people will criticize me, but you'll notice they criticize the tone or they criticize the messenger, but they don't attack my facts because the facts are just very clear.
Why do you think they criticize you? Because of your delivery, or they hate that you're right, Porter?
No, I think they criticize me because they know I have a big following, and if they criticize me, then they'll be able to skim off part of that following. I don't take it personally.
The market the last 2 days, yesterday and the last I looked, which I haven't looked in before, I looked right before we started recording. It's getting absolutely hammered. What are your thoughts when you're seeing this occurring?
It's a relief to me. I've got about 70% of my liquid assets in cash right now, so I'm all for it. There is simply an enormous a unprecedented level of asset inflation in dollar denominated assets. We're at a peak in financial asset pricing that we have never seen before in the markets outside of 1844, which is the railroad bubble, 1929, which was the auto bubble, or maybe the radio bubble, depends on how you want to try to classify it. And then, of course, 1999, which was the internet bubble. And I've heard some wonderfully intelligent people in San Francisco explaining that this is not like the internet bubble because the internet exists now. And back in 1999, you only had about 200 million people online, but now you've got billions and billions of people online, and therefore all these valuations make sense, which I admit is extremely logical and very compelling, but actually has nothing to do with it because, of course, valuations are based in a ratio. I'm not saying that the nominal prices are wrong. I'm saying that the ratios are wrong. But, the guy on TV is never going to explain that to the average guy in Peoria. So the average guy in Peoria is going to believe him. Yeah, I think that before this bubble is deflated, you will see valuation metrics decline by at least 75%. And that is not on anybody's dance card right now.
75%.
The valuation ratios. So if you look at the internet bubble, go from March of 2000 all the way to October of '08, right? And look at Cisco, just to pick a stock. I don't want to argue about these companies aren't Cisco. I'm just saying, look at Cisco. Cisco's earnings and revenues grew virtually every quarter from March of 2000 until October of 2008, virtually every quarter. And they certainly grew a lot. I think the compound annual growth rate of Cisco for that 8-year period was something like 25%. Great. Big company, good growth, earnings growth, sales growth, all that. It might have been even more. Could have been 35%. I can't remember the exact details, but very good numbers. But the point is, if you were buying it in March of '08, you were paying something like 135 times earnings. And if you bought it in the bottom of '08, you're paying something like, normal, 18 times earnings. So all that entire 8-year period was a gradual repricing of U.S. financial assets. And the assets that got repriced the most were mortgages. And unfortunately, a lot of people were very, very leveraged into mortgages, a lot of big banks, and they all got hurt the worst. So if you want to survive the next decade in U.S. dollar-based financial assets, you want to avoid things that are inherently leveraged because they're going to become deleveraged. And you want to avoid things that are ridiculously expensive. On the other hand, just like in '99, a lot of really deep value stocks are badly mispriced. Berkshire Hathaway is trading at 9 times earnings. Berkshire Hathaway has a price to enterprise value right now of 5. So, if you want to do well for the next decade, maybe you buy Berkshire Hathaway and you sell short something like Meta. Now, I'm not actually suggesting you sell short Meta. Please understand. I'm just saying that as a pairs trade, you want to buy financial assets that are high quality and reasonably priced, and you want to sell financial assets that are horribly mispriced and ideally of low quality as well. So, I wouldn't really pick on Meta because Meta is a great business. Zuckerberg created the greatest marketing machine in the history of capitalism, and it certainly deserves a very rich multiple. But I don't know about 50 times earnings. That, to me, that's a little too rich.
How do you feel about Apple? Let me share with you as just a regular guy and see if I'm on the same level as you for a second, Porter, with my thoughts. They make phones. I mean, they make computers too, iPads, but and their iTunes business. But their level of what the valuation of that company, I mean, isn't it way overvalued?
I believe it is. About a year ago, no, more than a year ago, a year and a half ago, I sat down with the CFO at Marketwise. This was back when I was still the chairman of the board of Marketwise and the CEO. And Marketwise is a very unique business that very few people understand very well. It has a large amount of what I call tax float. And a lot of subscription businesses have this. Marketwise has a long duration subscription business where their average subscriber length is something like 3.5 or 4 years. And as a result, they're able to legally, of course, defer taxes. So their billings don't count as revenues until those subscriptions are fulfilled. So in the eyes of the IRS, we haven't generated any revenue until 3 or 4 years after we've sold something. And in the interim, even though we owe that money to the IRS, it sits on our books. And so I was suggesting to our board that we should, as high quality stock analysts, we should be able to safely invest at least some of that money. And if we did, we could earn a much higher return on it than we could in T-bills. And so I suggested about a half a dozen businesses that could be safely bought at the time. And it was Cisco, it was Morgan Stanley, it was Deere and Company, it was Berkshire, and it was a handful of high quality P&C firms, property and casualty firms like W.R. Berkley, for example. And you could buy these very high quality businesses, all of which that have return on equity in excess of 20-25%. You could buy those businesses at that time for between 10 and 12 times cash earnings, which is a very reasonable high quality equity to buy. And my CFO said, well, yeah, you know what though? I've had Apple in my portfolio for the last 20 years. And I think if we're going to invest, we shouldn't have a portfolio without it. And I said, well, I can understand that. If I had an entry price of 20 years ago, I wouldn't certainly want to sell it. But I don't think it's a good idea to buy a business at 35 times earnings that hasn't grown revenues in 4 years. So I agree completely with you. And I've had the choice of making that investment and have chosen not to. Apple has one of the greatest consumer brands that's ever been built. And by the way, so does Sony. You can buy Sony right now for 16 times earnings, or you can buy Apple at 35 times earnings. Am I saying that Sony is as good of a business as Apple? No, but I am saying that Apple is not twice as good as Sony. And so those relative valuations are going to have to work themselves out. And I think it's really interesting the way that investors will sort of willingly delude themselves about all these things. There's never been a time in history where the stock market traded at the current levels that it is, where it didn't see an enormous, very damaging, panic-like sell-off. So if that happens again, why would anybody be surprised? It's much harder to believe that valuations can go higher from here and that stocks can stay higher for another 5 or 6 years. Now, is it impossible? No, I have seen it happen. I've only seen it happen once, and that was in Japan in the late 80s. If you look at Japan, from the big correction in the global stock markets in late 87 until the top of that market in late 89, the valuations got so completely insane that I don't think we'll ever see anything like it again. The average stock on the Nikkei was trading at 70 times earnings. And the major brokers in Japan had invented a new kind of accounting to justify the valuations. And, that stock market then proceeded to have a 20-year bear market. So the higher the valuations go, the longer and the steeper the resulting correction will be. And it is just math, people. It's just math. Over time, equities are going to compound at about 8% a year. So the numbers have to the numbers have to correct.
What do you think would be the possible igniter for this decline to start? Would the tariffs that went into effect today, could that be a...
So if I told you that we were going to raise income taxes across the board on every family in America by 25%, would you expect the stock market to go higher?
No.
Yeah, me neither. So sure, a global trade war, that'd do it. Yeah, by the way, I still can't figure out why anybody in America thinks that tariffs don't apply to them. But currently, right now, as we're speaking, the power generation firms in Canada that generate power from hydro dams on the Great Lakes and send that power to customers in Michigan and other places, Illinois, Indiana. I'm not quite sure of all the exact locations, but there's a large amount of electricity that gets bought every day from American customers provided by Canadian power firms. Well, all their bills just went up 25% today. So how's that not a tax that's going to affect Americans? The idea that the Canadians are going to pay it is laughable. How are 20 million Canadians going to pay for America's budget deficit? We're a nation of 350 million people.
And Mexico, how will that impact, what comes in from Mexico and what goes out?
So if you want to talk about it sort of in a broader case, what you have to understand is the reason why global trade is so important is that it maximizes comparative advantage across the world. There's a reason why all the oil gets pumped in Texas and not in South Carolina. There's a reason why all the movies get made in Hollywood, not in Fargo, North Dakota. There's a reason why all the TVs get made in Shenzhen, China, not in Detroit. There's a reason why the cars get made in Detroit. And the reasons all have to do with large capital investments in supply chains, local labor competencies, and resources. Resources are not equally distributed around the world. A lot of oil is in Texas. A lot of natural gas is in the Marcellus. If we're going to maximize the value of those resources, if we're going to maximize the value of our investments in those resources, if we're going to maximize the return of our labor in those resources and in our existing supply chains, we need to have access to the largest possible markets because we have a comparative advantage in some areas of our economy. Just like, by the way, there's a reason why they grow bananas in Costa Rica. And that's because that is their comparative advantage. And as long as everyone around the world is able to maximize their comparative advantage, global wealth will increase for everybody. There is no loser in trade. If you've got excess bananas and I've got excess financial newsletters, we can make a deal as long as I need a banana and you need a newsletter. And as long as we're both meeting the market on a free market term and with a price that clears the market, nobody loses. So the idea that Trump has been saying that Canadians have been exploiting us or the Mexicans have been exploiting us is utter nonsense. It's absolutely false. And all these tariffs are massive taxes. And if you think about what they're taxing, they're not merely taxing local labor or local capital or local resources, all of which would be bad on the economy. What they're taxing is decades and decades and decades of innovation and progress that has been made through global trade. So he's really taxing 50, 60 years of progress. And that's going to have a very big impact on the efficiency of the global economy and on the relative values of our comparative advantages.
I know he's talked about, the justification of why, or the administration, why they're doing this, but, do you think, and this is something Matt Smith and I were talking about when he was on a few weeks ago, are they intentionally trying to devalue the dollar by using tariffs? Or what do you think the real intention is with it?
I have no idea. And I'm not trying to throw shade on anybody else, but I just don't think it matters. Maybe if you're Nancy Pelosi and you know what's really going on, you can trade. But otherwise, I feel like you're just guessing. I just don't know. I think that I do think that the people who are now in charge of government realize that we cannot continue to spend 7 or 8% of GDP more than we're taxing. And so I think they are trying to raise revenues, and I think they're trying to reduce expenses. But no one's talking about the elephant in the room, which is you know, it's great that Elon Musk is embarrassing all the bureaucrats by pointing out how much money they're wasting and how much fraud is in the system. And that, I'm not saying it's not important. What I'm saying is ultimately that's not going to make any difference, because we have an entire system that's set up that allows people to vote themselves other people's wealth. And as long as that system is in place, eventually our monetary system is going to collapse. And you see it all the time. But most obviously with the structure of the Ponzi scheme that lies behind Social Security and Medicare, it's not sustainable. It's going to have to be radically reformed. And until that happens, we're not going to materially change the weakness in the dollar or the growth in inflation.
And the question is, how willing is anybody? How willing is anyone, going to do that, to step up and do what really needs to be done? And Porter, I don't see that today. Maybe I'm wrong.
No, by the way, they won't. And regimes like this don't go out with a whimper or with reform. They go out with a very big revolution. And I think this, by the way, no one's talked about this yet, but I think you might see that revolution first in Germany. I think you might see a civil war in Germany before you see a civil war in America. But that's the way all these things are going to resolve. Sooner or later, the people who have been paying for all this stuff are just going to say, that's enough, I'm not doing it anymore. And people are, or even worse, the people who've been getting all this stuff for free, when they try to reform it, they're going to become violent and push back. But nobody gets off the teat without fighting. And again, talk about an out of consensus call. When I talk about that, people think I've got a tinfoil hat. And I go, okay, great. Well, then just show me where in history a socialist state like the kind we have now, where more than half of the people in every county in America depend on the federal largesse. So I think it's 53% of all the counties. So a majority of people and a majority of the counties in the United States depend directly upon transport payments from the federal government for a majority of their income. Tell me how that's going to go when you try to turn that off. It won't go well.
Why Germany first?
Well, because Germany isn't really a country anymore. It got divided by politics for what 40 years after World War II. And Eastern Germany has a whole different culture than Western Germany. And Western Germany is diluted by the Greens. And East Germany has had heavy immigration from Russia. And it is still very much a sort of an old kind of communist kind of place. They have a very different worldview. And those two models are inherently incompatible.
Do you think the events that occurred Friday with Zelensky and Trump and J.D. Vance, did that signal to you the end of possibly NATO or the EU?
That's a great question. I think that there are more Americans than ever before, largely because of Twitter or X or whatever you want to call it, that have a radically different worldview than they would have 10 years ago, because they see now that both sides of the aisle in the United States have false reasons for war. And they have come to doubt because of all of the failures of our foreign policy, the failure in Afghanistan, the failure in Iraq, the lies about Iraq, the failure in Somalia. I think they've just come to realize what Ron Paul was saying 25 years ago is true, that the more we put our troops in other countries, the more war there will be. And if you're genuinely interested in security, the easiest way to win a war is not to have it in the first place. So, did we need to become involved in Vietnam Civil War? Nope. Did we increase our security by being there anyway? Nope. How about our invasion of Grenada, our invasion of Panama? How about our occupation in Kuwait? How about the war in Iraq? How about the war in Iran? None of that made America safer. it made us more resented and more the target of angry retaliatory strikes via terrorism and things like that. And I think a lot of Americans are going, we've been spending a whole lot of money and sending troops all around the world, and it doesn't seem like it's working. So I think that trend of growing American foreign policy isolationism has been building for a long time. And I don't know that it'll lead to the end of NATO. I think it's probably a bridge too far for now. But I think we're going to have a very different relationship going forward, especially if J.D. Vance is able to win re-election. If we have a 12-year period of building American isolationism, the world will look a lot different.
What about the European Union? I mean, you spoke about Germany on the economic side. Would the events from Friday be a kind of a starting point to break that up? Because EU, is it on a sustainable path anymore?
Certainly, and I think you're gonna see the West Germans who want to continue the war in Ukraine and want to put their own troops there, and the East Germans are going to go, no way. And the other thing that's going on, funny, it's interesting in Germany is, I was actually writing about this today. The West Germans decided they were going to shut down all their nuclear power plants and all their coal plants, and they've destroyed their entire industrial base. I believe in time that global warming will become thought of as the modern equivalent of the flat Earth Society. In 50 years, no one will believe that anybody thought any of this stuff was possibly true. And the people who have embraced it and destroyed their economies will be revealed as either traitors or morons or both. And I think if you could get to the bottom of it all, I suspect you'd find out that Putin has financed all of these people. What better way to weaken your most important strategic rival than convincing him to destroy his own industrial base by walking away from decades of huge investments in power infrastructure? You don't have to go destroy the country if they're going to destroy it themselves.
What about the rest of Europe in terms of London and France and Spain? And you see what's going on in Ireland right now.
Yeah, they're well on their way to destabilizing all of Europe. Well on their way. Think about this. Germany has long been one of the most important and well-run industrial countries in the world. It always had a sound currency. It always had a huge manufacturing base. It always grew per capita GDP. Germany was a real country. Germany's GDP has been, Germany's per capita GDP has been growing at less than 1% for 15 years. This is the stuff that civil wars are made out of. If you start making it impossible for your best and brightest people to make a living, there's going to be trouble. And if at the same time you let in millions of, Islamic rapists, you're setting the stage for some real fireworks. So I'm not sure how it'll all kick off, but I suspect you're going to see at some point a very big change in the way that those countries are governed. And I don't think that you're going to see that without a violent counter reaction to what we've seen over the last 25 years. Somebody's going to come to power promising to get rid of all of the foreigners and to build coal plants. And that person's going to get elected, and that person's going to stay in power. And I think we all better hope it's not a new Hitler. We can survive who was the French chancellor after World War II? De Gaulle. We can survive a De Gaulle. We can't survive a Hitler.
And I don't think that's that far off what you're talking about.
No, it's not far off at all. And by the way, you have no idea what it will be that will spark it. Let me tell you, everyone thought of Greece as a civilized member of the EU and the G20. No one would have believed that Athens was going to erupt in an orgy of violence where hundreds of people would be killed from fire bombings and riots. because of a sovereign debt crisis. What? A sovereign debt crisis in Greece? How can that happen? They're a member of the EU. They use the euro. They follow the what is it called? The Maastricht Accord. What's going, and what started that? Greece had been bankrupt for at least 15 years before the riots in 2011 or 2012, whenever they broke out. And Goldman had been fudging all their numbers. That had been going on for a very long time, and there wasn't anybody in finance who didn't know it. But one day, like a grain of sand at the very top that starts the avalanche, something just changed, and then everyone's mood changed. And I don't know how to predict those moments, but I can tell you when they're going to occur. Just like I could have told you for the last year, there's going to be a crash in stock prices, and I have said it many times. You can't know what the pen will be. You can just know that all of the dry timber is there, and there's going to be a spark. Sorry to mix my metaphors, but yeah, these things are not sustainable, and things that are not sustainable don't last.
Now, how do we talk about Europe, but how does your sentiment feel towards the United States in terms of following the same trajectory, or are they farther along down the path?
They're about 10 years ahead of us. Yeah, but and they also don't have an Elon Musk. But I'll tell you what, you want to talk about how much America has changed. Let me ask you this question, because I get accused a lot of times about being an alarmist or things like that. I always tell people I don't have a crystal ball. I can just tell you these are the risks that we're facing. What do you think would have happened in America? Where do you think you and I would literally be right now today if President Trump's head had been 1 inch further to his right? Do you think there's any way half of the country would have ever believed that the FBI or the CIA did not murder him? You think there wouldn't be riots in Washington and in New York? If they had killed Trump, this country would have been ungovernable. The conservatives and the Republicans are generally pretty peaceful, pretty law-abiding people because they own a lot of the capital. They own a lot of the assets. But there's a whole bunch of people from Pennsylvania and plumbers and electricians, like they said in that movie, The Breakup with Aniston and Vince Vaughn. I'm gonna go get my some Polacks who don't have a whole lot to live for and beat somebody up. I mean, there would have been some people who were seriously, violently angry, and you wouldn't have been able to calm them down.
That's how much we're hanging on by a thread right now.
That's right. And it's just luck. It's just luck that didn't happen. And I also think it's interesting that the fact that somebody was trying to kill Trump, it wasn't some alienated 19-year-old kid, right? Someone was trying to kill him. And those some people are still out there. So, I think we're a long way from secure. And I think that it's probably going to get more unstable because there's certainly a chance from these trade disputes there could be a global run on the dollar. There's all kinds of things that can go wrong when your country is, $36 trillion in debt, and you've got your troops stationed in 120 different countries. There's a lot of things that can go wrong.
Yeah, I use the term blissfully unaware with people, and I get pushback, but I still feel like not all people, but the majority, they thought Trump would win and this would all go away and we would be done and he could just fix everything by moving levers. It's not how this works.
No, not at all. I'll tell you something else interesting. Trump got 30% of the vote in New York City, which is where I am today. 30% of the vote. That's the most votes Republicans got in New York City in probably my lifetime. I mean, that's extraordinary. So there is a very strong undercurrent of a lot of people are very upset, and a lot of people are looking at the world in a very different way than they did 8 years ago. Very different way. It's fascinating. But you're exactly right. Trump's not going to wave a wand and solve this. By the way, I don't know if you've seen or not, but I've been saying in a lot of places, most notably, of course, on Twitter or X, whatever we're going to call it now, that the government will never, ever cut spending. I do not believe it. And I don't think people have any idea why. And it's because all the spending is driven by these so-called mandatory programs. It's all the growth and things that are linked to inflation, like Social Security, like Medicare. Other thing people don't realize is that spending is controlled by Congress, not by the president. So there's not going to be a balanced budget until Congress says that there will be. And I'm sure you saw this, but last week, the Republicans, who control both houses of Congress, passed a budget that will increase the deficit this year by something like what, 400, 500 billion dollars. Those are the people that are going to save us from our financial crisis. No chance.
And nobody's interested in stopping this. Not in Congress.
Nope. I don't think they have any idea what kind of fire they're playing with, by the way. They're not the sharpest tools in the drawer.
Do you expect this to be worse than 2008? I was having this conversation this morning with somebody, young guy, and he was like, "Oh, the real estate's going to crash," almost like saying it as a good thing. And I'm like, I didn't say this, but I'm like, you have no idea what is about to happen potentially. This is not a good thing.
I think that the purchasing power of the dollar is going to fall by about 50% over the next 4 years, which is what it did in the last 4 years. So we've seen this before, but the price of eggs aren't going down, folks. That's not how this is going to work. And I don't expect for real estate to crash because there is not a high level of fraud in the mortgage banking system. There is a lot of fraud in the FHA loans, but they're a relatively small part of the total mortgage market. I think that there is going to be a very severe recession. And I think it will be a little bit like Ronald Reagan's first term, where we had a very severe double dip recession in 81 and 82. And people don't remember this, but stock market multiples got down to like 6 or 8 times earnings. I remember at one point you could buy ExxonMobil with like a double-digit dividend yield. So I think it's a good time to be very conservative and have a lot of cash. I think we're going to see financial prices reset. And, that's going to be bad news for a lot of people, but it doesn't have to be bad news for you.
Yeah, and I think that, like you said, this is going to provide opportunity for people that are, that are sitting on the sideline. I've heard you on other interviews talking about AI, and I thought, how it's going to hit people at the top level and it's going to hit people on the bottom level. How, on the top level, how much do you think it will impact, let's say, accounting, CPA, CFO, controller level?
If you go back to the 1970s, before the advent of Excel spreadsheets, and you went to an accounting firm, there were 10 times as many people working there with eye shades and graph paper. And after the advent of Excel, all those jobs went away. So what I expect you'll see is a pretty severe recession where GDP in real terms falls, over a number of years, 10 or 15%. And a lot of the jobs that are white collar jobs today will be replaced in that period over the next 3 or 4 years. You're just not going to need nearly as many lawyers. You're not going to need nearly as many analysts. That's me. You're not going to need any of these people.
Will the actuary profession be impacted by this?
No, they already have been. That's already done. You're not. It will not be long before there are businesses that have branded AI content that is better than any human can produce. Content meaning legal contracts, content meaning journalism, content meaning research, content meaning consulting, content meaning tax returns. Like there's no reason to have humans doing any of these jobs anymore. How many hedge funds and other kind of financial professionals live in Manhattan right now and do nothing but read or write securities filings? You don't need any of those people anymore. Who was it? JP Morgan's guy was saying that, he can have AI prepare an S1 filing for a client now. And that normally would take a team of 12 or 20 people a week. So there's going to be huge changes in the financial industry, huge. And there's going to be huge changes in other kinds of human thought content like that.
Do you think will it all become centralized, or will there be a way for it to be decentralized?
I think you'll see it evolve like a lot of markets where it just becomes sort of a duopoly or a small group, a cartel. It'll be 3 or 4 people that do it all, or it might be something like you see this in software, right? Microsoft does all the business software. So anyone who has a business AI thing, like I'm making this up, I don't know what the Microsoft's plans are, but like if Microsoft decided that they're going to do everyone's taxes for free using AI, and they bring out that branded product and they bundle it with Windows, there'll be no more accountants. They can put every accountant in the entire country out of business in a day. So you will see things like that. I imagine that Microsoft will try to target the business use cases. I imagine that Meta will try to target the entertainment use cases. I imagine that that Twitter will try to target the social use cases. They'll all do things that are branded, and it'll be AI, and it'll change the way people live, work, and travel. It will change everything. It's really extraordinary.
And how much will it impact the healthcare?
Not as much as you think. It'll impact things like radiology, diagnostics, but it's not gonna
coders and billers.
Yeah, it'll impact coders. By the way, there is absolutely no more software. If you're going to school for coding right now, you better go back and learn how to be a coal miner
Or a mechanic.
or a mechanic. Yeah, and by the way, those jobs are coming next, because within a decade, robots will do all of that stuff way better than any human can.
Even like from a mechanic standpoint, or?
Yep. Yeah. And you want to talk about procreation. You think the birth rate is low now. Wait till you can order your robot to look like anything you want it to, and we'll never, ever talk back.
How far away do you think that is?
Less than a decade.
It's like Terminator, Porter.
Yeah, more human than human. You can already spend all day long talking to Grok, and it's entertaining. You don't need friends anymore, as long as you want to just talk.
Well, and there's nothing that you and I can do to stop this. And this is where I've talked about the CBDC, right? People, you say that and people are like, oh, sent to CBDC. And to me, it's already here. I mean, you do everything on your phone. You pay your bills on your phone. You check into flights on your phone. You do everything on that thing.
Right. We're already all cyborgs. It's just not implanted into us yet. You can't do anything without your phone, and your phone records everything that you do one way or another. Yeah, that's right.
I mean, imagine life 20 years ago. I was standing in line getting coffee yesterday, and this guy I'll be 47 in May. So he was probably my age or a little bit older. And we just started talking about, because my credit card wasn't working when I was going to pay for it. So I had to do the tap, because I wasn't taking the reader. I go, man, you remember the old days when you were a kid and you went to the mall and they had to do the hard, that machine that wasn't electronically connected to anything, electronically connected.
You hear it scraping back and forth?
Yeah, and the paper.
Yeah.
And I said, man, you imagine 20 years ago, life when you had to get on an airplane, you didn't have or even 25 years ago, you didn't have a smartphone. You figured it out. You made your arrangements, and your ride was there.
People had to actually do what they say they were going to do. If you made plans with someone, it might not be 2 or 3 days until you're supposed to meet them. You had to be there.
So this whole thing is inevitable where it's going. We can't stop it.
No, there's no stopping it. No. No. Yeah, and it's gonna. One of the things I like to think about in broader terms is just the way that societies are really created with energy. So it was impossible for human population to grow beyond about 100,000 people in a city because there wasn't a resource, there wasn't an energy that was dense enough to support more than that. If there was more than that people, then too many trees would get cut down. There wouldn't be any fuel because the fuel was wood. And so it wasn't until the 1600s when the English pioneered coal mining that the price of fuel fell far enough to allow really greater density. And that's when the population of London first got to around 1 million people. And then, with the invention of the steam engine, again, greater power density, more availability of fuel, population continued to grow. And by 1900, the population of London was 6 million people, largest city in the world and it's the largest city in human history. And then we switched from steam to oil, from coal to oil. And then, of course, in the 1950s, we went from coal to nuclear. And that whole process of making energy more abundant and cheaper by using greater and more dense sources of energy really stalled. You haven't seen any increase per capita of electrical production in the United States since the global financial crisis. And all of these things we're talking about, all of this AI and all this robotics is going to require a 20-fold increase in electrical production in the next decade. And that is not on anybody's dance card either. So the one thing that will hold any of this stuff back is just we need far greater and more dense sources of energy. So we're going to need lots of local nuclear reactors because that will bring the power to the edge of the network. We're going to need lots of more transformers and local grid capability. And of course, the thing that's going to make robotics possible is energy. We're going to need way, way better batteries and quick charging and all those things that will go along with it. Because it's really Matt Smith and I call we call electricity the spice from the movie Dune. And within a very short amount of time, whoever controls the spice will win. Whoever can get the baseload power to their AI systems and their robots will win, whether it's an economic contest or whether it's a physical contest, whether it's a war, because you're not going to beat an army of robot drones. You don't have a chance. And that will all come down to who has enough electricity. So the real battle of the next decade or two is going to be in power production and transmission capabilities and technologies.
Who's the front runner right now?
Oh, that's a great question. That's a very, very good question. I would say right now America is still the front runner. But I also think that China and Japan and other countries can catch up with us very quickly if we don't move more aggressively.
Do they recognize what you just described and the sense of urgency?
That's a great question too. I know that senior people in technology understanding everything I just said, and I know they're moving as fast as they can to acquire those resources. That's why you saw Microsoft trying to buy 3 Mile Island. That's why you see all these people privately investing enormous sums in small modular nuclear reactor technologies. Everybody knows that has to come, and I don't think it'll be long before you're seeing small nuclear reactors pop up as a normal part of a community, and then eventually even a household. This is way down the line. This is 50 years from now, but yeah, we have to have a whole lot more energy, and we have to have it much more widely distributed or there has to be some kind of innovation that I can't imagine in transmission. But you're just not going to be able to send enough electricity to all these places. So you've got to have the power sources closer.
Whoever wins this wins control of the world.
Whoever wins this wins control of the world. That's right. And especially once AI becomes sentient, which no one else thinks is going to happen, but I think is inevitable. You're going to have an AI system, whether it's the one that's being built at Stargate or the one that's already been built in Memphis. You're going to have one of these systems that figures out things that humans can't figure out. And that's a really scary idea, but it'll happen. It'll happen.
Where can people find you, Porter?
Well, I think the easiest thing to do is just to read my free daily e-letter. I know it's old-fashioned technology, but that's mostly what I do is write e-letters to people, and then of course I write daily. It's a portersdailyjournal.com, and I write every day. And then I have a subscription product that comes out, The Big Secret on Wall Street, which comes out on Thursdays. And that's $1,425 a year, which I understand is too much money for most people. But you'll forgive me for only wanting to do business with rich people because they pay the best. So you can read me for free at Porter's Daily Journal, or if you want my actual equity research, then you can subscribe. And the subscription product is hosted on a website. And that website is porterandcompanyresearch.com. So you got Porter's Daily Journal, or you got Porter and Company, all spelled out, research.com. Thanks very much for having me.
And your social media too, your X handle?
The X handle is just Porter Stansby, because that was that's the most of Porter Stansberry I could get into the Twitter handle at the time. Porter Stansby.
Porter, thank you so much for doing this. I look forward to continuing to follow your work and more conversations ahead. So thank you.
Michael, thank you for having me. It was a great pleasure. You asked some great questions.
Thank you so much. Mic drop.